The long-term story with gold and silver is phenomenal. We're destroying the world's fiat currencies, and capital is flowing back into real money, which is gold and silver, and that's not going to change. Everybody's running massive deficits, and they have no way to do anything about it. Now, structurally, the precious metals markets are in a really strange, very temporary place where, for the longest time, the paper markets in the US and Europe have determined the spot price of the metals. But that's starting to change. As we've been saying for years, sooner or later, physical is going to start determining the price, and then look out. That kind of thing is happening right now with the Asian exchanges, where if you're a big company and you need, let's say, silver for the products that you're going to churn out in the next couple of years, you probably want to go to Shanghai and get your physical, because that exchange is designed to make physical available to fabricators, to people who want it. And the price of physical on the Shanghai exchange or the other European exchanges is much higher than the paper exchanges. And now you would normally think that would create an arbitrage, right? You go to COMEX and you buy silver for $79. And you take it over to Shanghai and sell it for $110 or whatever. And that is kind of happening, but it hasn't closed the gap in pricing. And the reason for that is that there's not enough silver on the COMEX exchange and the other paper exchanges to satisfy the demand that is now present in Shanghai and the other Asian exchanges. So that's really important, because that means that the paper markets are running out of physical. And that means that at some point, there's some kind of a reckoning where, a bunch of futures contracts show up and say, hey, I want physical silver. And the COMEX is going to have to say, well, we actually don't have enough to settle your contract, so we're going to give you cash instead. And at that point, that's a default, even though they're going to say it's not a default because they paid the contract off with cash, but they couldn't pay it off in the thing that the contract holder wanted. And that means that thing has basically ceased to exist on the paper exchanges. And see, that's where this thing kind of breaks, because all of a sudden the paper exchanges become irrelevant, and the real price is the Shanghai price. And that's a very high price. So you see this gap up of $10 an ounce or whatever in silver, and understand that even the physical exchanges probably don't have enough metal to satisfy the demand of the electric car companies and the solar panel makers and the military industrial complex of the whole world. There's not enough silver for that. And then you get the panic buying. That's the point where everything goes parabolic. And that is the reason why you don't want to be selling out of your physical metal or your mining stocks just yet, because we haven't seen the resolution of this. Well, we're kind of heading into it, and you see a lot of disruptions and everything, but the real resolution is going to be epic when it happens, and you absolutely want to be there for it.
John Rubino warns that physical silver is running out, currencies are collapsing, and institutional money is just starting to flood into gold and silver miners. He says the bull market has years of runway left, and smart investors should be gradually accumulating now before panic buying begins.
I don't have the slightest idea how this is going to play out. There are so many ways for a country that with lower technology than the U.S. to strike back. And, we could be seeing planes blow up, or, bombs being smuggled into different places. In that kind of a war, it's an asymmetrical war. It becomes very hard to predict what's going to happen.
So you're expecting increased risk, though.
Well, lots of
risk.
Yes, which doesn't mean any of it plays out. It just means that there's a lot of terrible things that could happen, and there's no way to know ahead of time exactly which of those things will happen, if any. But, I think the world is a very scary place right now. And I remember not so long ago that we elected a peace president. And we didn't get that. We're getting just continuous war. You know, you can find silver linings, literally silver linings, in so much of what's going on in the world right now, in the sense that if we're betting against the world's fiat currencies and we're betting on precious metals and the equities that are related to them, then these wars are actually good for stackers and, you know, good for mining stocks and things like that. And I in no way do I want to equate, you know, mass slaughter with us making money in the financial markets. But psychologically, it's helpful to me to focus on all right, well, you know, these missiles, they each use several hundred ounces of silver. Probably the reason silver decoupled from gold today is that silver is an industrial metal, and there's a lot of angst out there about what's happening in the world industrially. The stock market was down. People are worried about trade flows, things like that, and that's generally bad news for an industrial metal. But like you said, the long-term demand for silver in particular is off the charts, you know, and I guess there is a scenario where demand for silver goes way down, but it's such an unlikely scenario. You know, it's where we stop fighting, you know, nobody shoots any more missiles off, and the demand for electric cars and solar panels goes way down, and we stop building data centers for AI. And, you know, there could be a deflationary depression of the 1930s magnitude that would temporarily lower demand for the most important industrial metals. But, you know, in a world of central banks with monetary printing presses, that's a little hard to envision, because whenever anything starts to slow down, the central banks just hit it with lower interest rates and money printing. And, you know, it wouldn't be a surprise in the next couple of years, even if everything is okay, we don't have like negative interest rates in the U.S. again, just because the current administration wants really low interest rates, and they put their guy in charge here. So probably during that job interview, there was a promise for 0 to negative interest rates in the next couple of years. And so that will tend to goose industrial demand if we do that. If we go back to super easy money, at the same time that it puts the final nail in the coffin of the big fiat currencies. So that would still be a really favorable environment for silver. So yes, it's possible that a series of things happen to lower demand for it, but it's really unlikely. You know, it's much more likely that almost everybody who's currently using a lot of silver uses even more 5 years from now than they're using now. And we just run out of it. You know, that's the most likely scenario. I think the amount of cash flow that they've got coming in guarantees a lot of action in this space, right? Because, you know, the fourth quarter of 2025 was the best quarter ever for the gold miners by far. And we're 2/3 through the first quarter of 2026, and it's a much better looking quarter. You know, the average gold, silver, and copper prices are all higher than they were in the fourth quarter. So there is just a ton of money flowing into this sector. And that means a few things. One is that we're going to see a lot of action because, for instance, Newmont reported massive cash flow in the fourth quarter, but also no growth in production and slightly higher costs. And their forward production guidance is flat. So the gold price makes them really exciting, but their operations need to be goosed, really, from Wall Street's point of view, right? And so somebody like Newmont is going to hear over and over again, well, how are you going to get production up? You know, and yeah, M&A, and they've got enough money to basically buy anything in the sector. So expect. And Agnico Eagle's in kind of the same boat, and Barrick, and on and on. You know, there's just a lot of companies with massive cash flow right now.
Are you expecting, you know, once M&A starts occurring down into the junior sector, are you expecting a complete re-rating of the junior sector as folks are realizing what's taking place, and they're saying, well, this one could get acquired and that one could get acquired, et cetera. And so there'll be a wholesale re-rating of the asset class.
Yes, I think that it'll take the shape of panic buying by the end of the process, because it always starts out with the big miners with production and free cash flow being pretty cautious because they remember the last time when they overpaid at the top of the cycle. But as time goes on and more cash builds up on their balance sheets and more investors start complaining that they're not growing fast enough, then they'll go out and basically just buy whatever is still available. That's how it usually ends in this industry. We have basically given up on trying to control debt at the federal level and all the other levels too. Every sector of the U.S. economy has taken on more debt than it can handle. And that means that there's no choice at some point but to try to inflate the excess debt away. In other words, lower the value of the currency really aggressively. So that's baked into the cake. Ray Dalio and the rest of those guys are right, in my opinion, that we're past the point where there's any other choice. And that basically means that all the stuff we've been saying up to this point is highly likely, because the overall monetary environment basically guarantees a currency crisis. And then everything else that we've talked about flows from that currency crisis. So yeah, it's past the point of no return for most of the major countries of the world. Russia, not so much. Switzerland, maybe not, but basically everybody else. All of our currencies are screwed. All of our current financial systems are going to have to be replaced by something else in the not too distant future. So that currency reset should be what we are all looking at. What form is it going to take? And if it's a gold standard, then it's understandable. If it's something else, then we have to learn about whatever else that there is that they're going to try. But yeah, a currency crisis followed by a currency reset is basically inevitable at this point, barring something that's, a massive black flag, like aliens landing on the White House lawn or something like that. Barring that, then the whole gold bug scenario is in place and playing out as expected. Plenty of time for things to get really crazy. Let me illustrate that with a story. I've got a friend whose money is managed institutionally. And his financial advisor has done great for him. The last 40 years, he's more or less matched the S&P 500. So he's made a lot of money over time. But his advisor never put him in precious metals, ever. And so in effect, that means over the last couple of years, this year and next year, let's say, he missed the best performing asset in the market. And he was paying a professional to miss the best performing asset in the market. And he's kind of perturbed that happened. So he's asking for that to be rectified, so he's putting pressure on his financial advisor to get him into some gold stocks. And so, yeah, maybe it's a little bit late in the cycle for that to be happening based on the gold stocks' recent moves. But there's trillions of dollars in that same boat where they totally miss this move. And the only way they can look smart is by getting some of that on their balance sheet, and so people won't necessarily know when they bought Agnico Eagle, just as long as it's on the balance sheet and people see that they own it now. And, extrapolate that across the whole global financial system, which right now owns maybe 1% of total investable assets in precious metals. And if they just go up to 3% or Lord willing, 5%, that's a parabolic move right there in precious metals miners. So, and that's highly likely. I mean, human nature being what it is, it's a lot of people that are mad at their money managers right now, and that has to be fixed somehow.